So this goes back to the 1st of June 17. This one goes back to the 1st of June 17. This one has an all-time high. Let's see what CoinGecko said the all-time high is. $525. And then let's see what it's like on this chart. And then here it says the all-time low is this. So let me see what it is on these charts. The all-time low. That looks okay. Let's see what this one is. Okay, so I think the Binance one is better. I think you have to ignore this wick here, this first wick. And I think, yeah, look, there's no volume at the first. If you look at the first part of this range, there's no volume here. So you're not going to get good volume data on that one. So we just stick to the Binance chart. And it's the Binance US dollar chart that you want, because that has all of the data, and you're just going to have to ignore this wick, and then and you just have to mark the all-time high as reported by CoinGecko, and then if you change it because you want to do the Binance instead, then you can do that later, but just have these two as a reference. I mean, we've been consolidating for many years, so we this is a range, yeah. This whole thing is a range. See that? So we've basically been in a range for 4 years, and even though it went up, how much did it go up by? Excuse me. From this low here, it went up to the high 45x. That's a lot, huh? From the second time it went up, from this low here, 30x. I'll try and do this quick, but sometimes you just have to look at the chart and see if you see anything. And I'm just trying to see if I see anything. It doesn't look like we've had any kind of Elliott wave, to be honest with you. I can't see it. I can't see like a 5 wave. I can't see that kind of behavior. Did it happen here? Not really. 1, 2. Maybe it did, potentially. Did it happen? Was that 5 waves? 1, 2, 3, 4, 3, 4. But then this kind of goes underneath it here. It doesn't really... I don't like it. And then if that was your wave 1, then this is... No, that's not that. Then this... You see, this is the problem. Like, if this was Elliott, this can't be a wave 1 because you made a new all-time low here. Do you see that? So, in terms of Elliott wave theory, the 2 can't come underneath the 0. So, if we had a 5 wave here, I'm just imagining it's a 5 wave up to there. That's your wave 1. Then this can't come underneath this 0, which would have been over here, and it came lower. It came all the way here. So that invalidates the count, and you have to reset the count. So if this is your wave 0 here, your wave 1 here, it would start here. Yeah, so this is correct. There you go. That's your wave 1. This whole bit is rubbish. This whole first bit is rubbish. There was no Elliott wave there. It was just a pump and dump. That's what this first part looks to me. And it really did dump because you made an all-time low. Yeah. So when you make an all-time low, that's a pump and dump effectively. And then we made our first correct 5 wave Elliott wave in the last bull market. And this whole thing now is a wave 2. I'm not going to draw it out. It's not necessary, but it's something like an A. Maybe I will. It's something like that. This could be there. It doesn't really matter because it's just a corrective move. And potentially what we're experiencing now is the first wave. And this would be the... So then this would be the wave 1. This is the wave 2. Wave 3. All right, so let me just change the color. I'll try and come up with some targets for you in a second. Hold on, let me just go to the weekly time frame now so I can see the candles as well. Yeah. So potentially what we're in now is a higher time frame wave 3, potentially. And obviously the bull market, let me get the bands. I like to put these in. This is the halving, roughly. This is when the bull market ends, roughly, like at the end of September. So whatever you're expecting this to peak out by that blue line, roughly. Yeah. And I would expect this 3 to somehow, I'd expect some kind of wave. No, hold on, let me do this right. This is the higher time frame. So there, this 3 would peak out. And so if this is correct, this is the higher time frame. This yellow one's the higher time frame. Whatever 3 we make, this 4 cannot come underneath the 1. Does that make sense? It doesn't really matter about the all-time high because this is the count. This is the one that matters. If this is correct. Roughly. In the next bear market, that would be your low. Your bear market low would be about $2.4. And so what we're experiencing now, potentially, is a big wave 3. And if we have the same return of 30x, 30x will take us to there. It's not likely, huh? You'd have to have a really impulsive wave 3 for this 4 to correct correctly, so it doesn't come underneath the 1. But anyway, so this is what I'm looking at. So we're in the wave 3 now, and in every bullish impulsive wave, there's 5 waves again. So every corrective wave, there's 3 waves. Every bullish impulsive wave, there's 5 waves. And it's all breaks down in 5 waves, 5 waves. Why 5 waves for the bullish side, and for the corrective side, it's most of the time it's 3, unless it's like an A, B, C, D, E, which goes sideways. So there's lots of different conditions, but it's very simple once you understand it. So let me just hide these for you quickly. So we know what we're looking at now. Potentially we're looking at an impulsive move. So if I do a 1-to-1 will roughly take us to the all-time high. And then these are your higher time frame targets of the 1618 would be the really nice higher time frame target. Let me draw this out a bit more accurately. That's correct. Is it still the all-time low? The reason why I'm doing it from here to here is because this is your 0, this is your 1, this is your 2. Yeah. So I'm trying to see based on the 0 to 1 to 2 what the next fib trend-based fib targets are. The 1-to-1 will take us almost to the all-time high. So I would expect this area to be one area basically. So maybe if it's possible, maybe we can get this first wave. We have to see how impulsive this first wave is. We're catching it quite early. If you're in this, you're catching it quite early. Did I not do the volume pool? Oh yeah, there it is. So the other thing is that we're just underneath this value area point of control. Usually what I'll do is I'll mark these out. Mark this one out as well. You see how that value area high almost lines up with the 618 extension of this trend-based fib. So there's definitely some kind of resistance there. And if I was to do a fib pull from this the last bear market high, see where that lands. You have your natural golden pocket resistance slightly lower. Where would it land if it goes to the all-time high? That's slightly higher. The all-time high is not that high, is it? It's there. Okay, so this is quite interesting. Look, this blue line is the all-time high, right? Because I added those numbers from CoinGecko. This blue line is the all-time low. If you take a fib pull from the all-time high to the all-time low, this golden pocket area comes perfectly with the 618 trend base extension and the value area high. You see that? So I think this is you're going to be your strongest resistance on the way up. This whole area. So I'm imagining that maybe we get like a wave 1 up to that area first. I don't see how the price can just suddenly walk through key resistance areas. And also you might get trap traders up here who are looking to exit. And so if I do a range pull on this volume to this one, the one that where we leave the range, which is this candle here, it kind of coincides, and it all coincides with the highest part of that is the point of control. So maybe what I'd be expecting now is for this to continue would be to form some kind of natural resistance here somewhere. And you've already got like a, to there, you're talking about a 3x, a 3.5x, just to get to that point from where we are now. Would that be wave one? I don't know, because at the moment when I'm looking at this expansive, this impulsive move here, it looks like we're about to start the 3. I'm thinking, that's what I'm thinking. If this whole thing is your 1, A, B, C, then maybe this is the 3. So you have to see how far the 3 takes us. Does the 3 go all the way up there? If that's the 3, then you're looking for another correction. And then the 5. Now, does the 5 take us above this resistance zone? Or does it just get back to the resistance zone? We don't know. So you have to see how the 3 plays out, and then you can evaluate. Then you can evaluate the 5, right? So right at the moment, I think you're in a, if you're in a trade now, it's a good trade. If you're not in a trade now, let me work out a trade plan quickly. And let me just see if there's anything else that I can see quickly as well while we're here. Yeah, you have a key level here. It's a monthly level. That's a really important liquidity level. This one is washed. You have a higher one up there. That's by up there. That's another monthly level. I can't remember what that blue line was. This monthly level corresponds with a weekly level, so this is definitely, you're gonna find resistance here for sure. Here, because you're coming into the bottom of this previous range value area low, and you've got 2 liquidity levels here. You have a monthly level and a weekly level on the same area. So as soon as you get up to this level, which is 85 cents, you're going to start hitting resistance, right? Then it's all about volume to see if there's enough volume to push higher into the golden pocket. But the higher up you go, the more resistance you're going to come across. You're going to come across this golden pocket resistance. You're going to come across this 618 trend base extension resistance, and then you're up into the value area high of the whole range. Yeah, some really important levels, and then you're into the previous range point of control. So basically your resistance starts here, and then it starts to get more intense the higher up you go. So you might get, yeah, and you got a monthly level there, and then there's a higher up monthly level higher up there. It's a bit higher up, so it doesn't matter. That's untapped as well. All right, let me just put all of this into like, let me get rid of all of this now. Get rid of that. This is the extension of the ABC. Where's my Elliott wave? It's there. Put it in there. Okay, that's better. So there is something else that you have to have a look at. It's I think let me just get my my two. Let me just keep those on the side. I'm going to separate. One second. Let me just have a look at this. David, are you watching? I'm just going to send you some messages from Ape. That noise in the background. It's Ape spamming me. All right. So I think you're there because I can see 3 watchers. So it's Majid and David. Yeah. So I would say that potentially, I think this is going to be important, Majid. I don't know exactly where the line is, but there's, if you take it from the all-time high, so the all-time high on this candle, it's this red, it's basically this red candle, this middle red doji, not this white, this green one, not this red one, this first red doji. Basically that's the all-time high, right? So if you take it from that candle to this candle wick, yeah, and then you also have another trend line from this candle. See that? See what I'm saying? So we're already into, we have this trend line to break, which we probably will. And naturally, once it breaks, it should go up to the next line quite well. And see that line, if it gets up there, it kind of lines up. I don't know when it's going to get there. But it could potentially, I don't know when it's going to get there. But if it gets there in March, it's going to also hit the top of this trend line, this white line that I have. So you have to see when it gets there as well, because you're going to come into major resistance, which is also this top trend line. This is the first hit. That's number 1. This is number 2. So the next time it hits, you're going to see a reaction. That's what you have to expect. It's the same as this. Look, this is number 1. This is number 2. This is the reaction. Yeah. So on the third hit, you're going to expect a reaction. So if you take it from the all-time high to this 2021 bull market high, the next time we get up there, however we get up there, there's going to be a reaction. And you're going to have a lot of confluence when you get there as well. I don't know if it's going to happen then exactly. So there's a definite short in the somewhere there. And then you have to see how this plays out, because then we could be forming, I don't know how this is going to form, but maybe this goes up, comes back down to do that, and then you get like a crazy break. This is kind of what I'm imagining right now based on the structure and the chart. You have this really long period of consolidation. It would make sense to come into this upper trend line, which is with the golden pocket, which is with these kind of key fib areas, and find resistance. It would make sense to be sold into, right? and it would make sense to come back. Now, I don't necessarily think it has to come back to this lower point of control, which is here, because if it's bullish, depending on how high it gets, that point of control will probably be the golden pocket, which I've just drawn. You see, I've just imagined, I've just made that up, but it probably from here, from this 2 up to this where it could find resistance, that would be the best entry. That would be the best entry, but depending on how bullish it is, I would probably expect it to do a 50%. Yeah, 50%. And effectively then what you're creating on the higher time frame, really high time frame, is like an A, B, C, D. That's what it looks like. A, B, C, D, E. Something like that. No, not an A, B, C, D. What am I looking for? Like this one. Hold on, let me see. Let me line these up perfectly so they match up. Get rid of this. See that? That's what I'm looking at right now. So you have a really nice trade all the way up to here, and then catch it at the 50%. You can scale in at the 382. Like basically your zone for scaling in is going to be here. The bullish scenario is going to be 382, but it could come down to the 50. I don't expect it to go down to the golden pocket here. Yeah, I don't expect that, because if it's bullish, which in my mind it is bullish, the reason why I think it's bullish is because we've hit the top 3 times, and so the 4th time will break, and then this next time it comes down, it will only come to 50% of this triangle, like halfway. That's what I'm thinking. Yeah, and that would make sense. And I'll show you another chart which is kind of doing that. So it's very similar to that, and this is a really higher time frame triangle. And I think the target, once we break, you're basically looking to replicate this triangle on the higher time frame. So I'm not going to perfectly draw it out, but it's going to be something like that. So you may get from where we are now, depending on when we reach this higher part, but remember it has to be within the band of the bull market. So this is actually wrong. So I've done this wrong. It's going to be more because this is the weekly time frame. This is those blue lines of the bull market. It has to be within that band. That's the caveat. So let's just say this is really impulsive. And then we have like a correction to the 50%. And then it comes back up, breaks that, goes really impulsive. Then we have another correction, maybe a flat, and it goes, I mean, that's potentially what you're looking at within that, within these two blue lines. So obviously the way to do it isn't the way I've done it, which is draw this stupid line. It would be to use the parallel channel to mark out these two lows. I'll do it roughly. To that high. That would be the way to do it. And so now you have your target. This top line will be your target based on these two lows. And so obviously this is a little bit overextended. And I think you could, if you can get above the all-time high to push up, that would be nice. And so we're looking maximum, probably maximum by the end of September 25, maximum looking about $17 maximum. That's what I'm like imagining, maximum. And from where we are now to there, that's a 64x if it was to do what I'm imagining now. There's no reason why it shouldn't, because of this whole this higher time frame consolidation pattern. There's no reason why it shouldn't do that. And what else do I want to say? Let me think. If you took the trade, I mean, you could trade it now, actually. Like, I think if you're in it now, you're in a really good position. I think breaking this white line would, a lot of people are just going to enter market. Yeah, because that's, you definitely have a trend line to break, and it isn't really much further up. It's only about 30 to 40% further up. I think a lot of people, rather than, will just wait for that to happen, or alternatively they'll wait for the price to get back above the point of control, but you're still buying into resistance. So there is still a bit of time to enter here. So there's definitely a trade to be had here all the way up to that line. That trade in itself is I'm assuming it's on the point of control. I'm assuming we've just made our low, so that's the invalidation. That trade in itself is a good trade. It's a risk to reward ratio of 1 to 16, this trade. You can short that top down to 50%. So you have another short trade. You have to wait for the topping pattern to happen. You can't just enter that blindly. You'd have to wait for it to reverse. So you wouldn't necessarily enter at the top because you need an invalidation. And then you can trade that back down to, I would say, to the 50%, which is where I've drawn. So you have another, potentially you have another trade there. That isn't as good. See, that's a risk to reward ratio of 1 to 2.5 potentially. Yeah, the short isn't as good. The long is much better. But you could take that short, or you could cover your long. That's also possible. And then you're looking to come again on the same concept, maybe some kind of back test of this line here. Who knows how it's going to play out. And then you'll be looking for a long, but this long is going to be the long. This long is going to be the long that you want to take. This is going to be the wave 3 long, right? When the price comes in to correct. And that is your wave 3. For sure, I would be looking to take it all the way up to the all-time high, for sure. That would be my trade, the wave 3 trade. And you're looking potentially, depending on how this reverses here and creates an invalidation. If you have a wide invalidation like what I've put now, you're looking at a 1-to-41 trade, 1-to-41 risk to reward ratio. So you risk $1,000 and you could potentially make, just to the all-time high, you can make $41,000. Literally, that's the trade. And obviously you're taking profit along the way, but if it goes to the higher target, then potentially it's oh my god, it's a 1-to-144 trade. But I would take it to the all-time high and let the rest run. I wouldn't you know, just in case, because you don't know what's going to happen at the all-time high. It could do this. It doesn't have to go up, it can always reverse, so you have to bear that in mind. This would be the long. This, like, now longing is good and now longing, so you could potentially, if you didn't want to short, what you could do is you could long here, take profit here. As the price comes back, the profits that you've taken, put it back in. You don't need, that is a short, because you're taking profit. Taking profit is like shorting. Yeah, so you could, as the price comes up, you could take 50%. As the price comes back down, put the 50% profit back in. Yeah, that would be perfectly acceptable spot trade. And then obviously when you get to the all-time high, you could take 50%. I would take more. I would take at least 75%, maybe more, maybe 80 or 90%, because you're in the highs now. You've already made a significant amount of profit. And if it goes up from the all-time high to my higher target, it's only a 2x. You know, it's not a big deal. Like, I'm not like gonna gamble all of my gains for a 2x. That's how I view it. So that's why at the all-time high you would take most of your profits out, and that is how I would play this trade. And then what I was saying, that it's similar to something else, and I will show you another chart, and I think it's Matic actually. Let me find it, because a lot of these, the way the price behaves is it copies itself from chart to chart. I mean, I've got something similar here. See? So when I was saying you're basically on the chart that we're looking at, we're roughly here, somewhere here, and you want to take it to there, are we? Or maybe we're lower. I don't know where we are exactly. You have to go back and have a look. It's slightly different because this is more of a downward shaping triangle. This is also a triangle. This is the same thing. It's the same thing. I'll quickly draw it. Basically the same thing. It's like you're entering it here. It goes up and then comes back down to go up, to go up. Yeah. Although this really overextended, and that first run, it went way above the target, because based on this triangle, the target was like there, and it just went through it. We don't know how this is going to play out. This might do the same thing, or it might do, this is what you expect. You would expect this, you know, you don't expect more than that. But again, who knows, like, the market can hype. I'm going back to our chart, IOTA. The great thing I like about this chart is that it's a really higher time frame consolidation pattern that we're experiencing on this triangle. Yeah. This is really nice. I'm glad you showed me this, because I'm actually now gonna kind of, maybe I'm gonna have a look and take a trade. You know, although I'm like heavily in travel, I don't have much capital. I don't want to sell travel because I know that's going to do well, but I'm going to do this on derivatives probably and just trade it from here to here. That's a 4.5x. But actually, this is the one that I'm really interested in. This one here. That's the one I'm interested in. And that would be after the wave 1 is complete, and that would be the wave 3. And then you're looking to trade that wave 3. Let me see. If that's your 1, this is your 2. Yeah, look, a 1-to-1 takes you back to the all-time high. I think that would be a correct target for a wave 3. Once you get to your wave 3 at the all-time high, you literally have to see how it corrects. Yeah. What kind of correction do you get? Do you get a flat, or do you get like a deeper zigzag? It all depends on how it corrects. If you get like a flat above the all-time high, that's extremely bullish, and so it could really overextend. It could go really further, and or maybe all the way up to the $23 mark that I have, or even higher. Like, this is how you have to see how the corrections are. And if it comes deep is bullish in terms of the expansion, but then the targets are relative to the entry, not relative to the lower entries. Yeah, so it's all depends. Right. That was IOTA. I hope that helped. Did it help? I do have one observation. We're not seeing much volume in this lower range here. So I want to see some volume now. You know, that's the other thing, because we have got volume in this. All of this has volume. Yeah. And we lost the volume. And in my mind, there's a lot of trap traders at these highs. That's what I'm imagining. Yeah. Look at that big volume up here. And I can't see much volume on the way down. So I don't know if these people who entered here sold. I just don't know. It doesn't look like they sold, right? At least not on this Binance US dollar. It doesn't look like it. So if you go up there and there's a lot of volume, then obviously these people are selling. Yeah. And then to get past that, you're going to need more volume. You're going to need more volume to get up there. And so I think that's the caveat. So if you're not getting the volume, then it's very possible that this fails. You have to bear that in mind. And we just don't get, like, it's a failed auction. It's a failure of taking this further. It's not as bullish as it could have been because we didn't get the volume to push it up. And so I think a large portion of this is going to depend on Bitcoin. And the large portion of this is going to depend on the interest in the project and whether the project has the ability to market itself, etc., get the hype going and all that kind of stuff. If you start seeing volume, then you may be looking to hold longer. If you don't see the volume and you start seeing the price reverse with volume, and that's what you want to see. When the price goes up, you want to see volume. When the price comes down, you want to see a reduction in volume. So you see how here the price went up, the volume increased. That was healthy. That was a nice healthy move. And you see when the price came down, the volume decreased. So then the price went up again. Yeah. Now the volume was less, and so therefore it wasn't able to push up further because it was less volume. So the volume does tell you something, you know. It's telling you something. I don't see much volume here, so I don't know. And this is only small volume. It's not much. You have this one green candle was a big buy. So actually, you know, maybe the volume is about to come. Like, you do expect volume to come in when you get breaks. So there is definitely a break to be had here. And the question is, do you wait for the break? Would you enter now? Because the reality is, for whatever reason, like if this is, if we're in the wave 1 now, and this is wave 1 of 1, and actually we're in the wave 2 of 1 of 1. I don't know if that made sense, but let's say that's your 1, we're in a 2 now, then that's the 3, I don't know, 4, 5, that's your wave 1. Don't know how this is going to be, whatever, I'm just making this up. This 2 can technically it can go as far down, but it mustn't come underneath the 0. Yeah, so it could come down to here, all the way down to here. And so that's the concern. I think that's the concern. But the minute you get a break out above this line, then you're no longer in the 2, really. You're in the 3. So I think while you're in the 2, you're not going to get that injection of volume. Once you get into the 3, once people can clearly see we're in the 3, and basically you'll know because we clear this line here, we clear this level. Once we clear that level, you're going to get an injection of volume. You should get an injection of volume. So I think a lot of people just wait for the injection of volume and then just ride that train, and even that could be the trade, you know. People don't need to trade down here. They can just wait for the break, and that would be just as good, because then you can just wait for the break. So that's also a possible way of taking this trade. Obviously you're looking at lower return. It's still 2.5x, but if you're what people you will do is they'll highly leverage with a small invalidation, and they'll market buy the break. That's where the volume comes. And so actually, potentially, a lot of people can make a lot of money if they catch the break correctly on an impulsive wave. I'm not recommending that. I'm just saying that's what people do. You need a little bit of a gambler's heart to do that, which I don't have. All right, that's IOTA. I think I'm done with that. And then obviously I'll put that up as a video.